All right, crypto is crashing. It is bad. It is not good. And it is something that we've got to get into today because this stuff is absolutely insane. So the crypto markets are going down really badly. Let's go into Webull right now and I'll show you kind of how bad it is. As you can see, we're on Palantir because I was looking at Palantir because that's the main stock in my portfolio. But Bitcoin is at $23,310. In this video, I want to talk about sort of why this is happening, give you a little bit more explanation, give a little bit more analysis on why this is going on, and sort of my thoughts on how I think about this. Bitcoin's at $23,308. If we go to the, let's do 1 year. There we go. 1 year, 69,000 Bitcoin was at back in November 10th, 2021. So that was when I, even on the radio, I remember I was driving in my car, turned on the radio one day, and someone was talking about, yeah, it might be obvious that Bitcoin's going to get to 100K. It's just a question of how soon it'll happen. And they were legitimately thinking, like, it's just on, it was such peak FOMO. So many people were afraid that they were going to miss out on this absolute gold rush or digital gold rush. So it's at 69,000. And then you can take from its journey, it starts to come down. People are like, buy the dip, this is fine. Back up to 50,000, buy the dip. Then we get into the new year. The entire stock market crashes. January was the worst S&P year for the S&P 500 and the NASDAQ that we've had in the history of the stock market in terms of how the stocks have been falling down. And it goes down. Then we get to 32,000. January 24th, 2022. This was like crazy. This is 50% down from, or even more than that, from 69,000 just a couple months ago. So then we have a little bit more rallies. We get to 47,000. That's awesome. March 2020. Could you even imagine March 2022 Bitcoin was at 48,000? That's crazy to even imagine given how far away that is from 23,000. And we go lower and lower. Then from May till basically June 10th, which was a couple days ago, we flirted with 28,000, 29,000, 26,000, 26 to 30 is where we kind of stayed stable at, even 31, 32. And then last night we crashed down all the way to 23. We got to the low of 22,572 this morning, and now we're at 23,250. We're $250 away from touching 22,000 again. Let's see if it even happens on this video. Now, the reason this is happening and the reason this is really rough is and by the way, before we get into the reason, let's go into ETH as well. Ethereum's at $1,200. It was just at $2,100 10 days ago. So why is this happening? Let's kind of dive into it. The main reason for this is because crypto lender Celsius Network freezes withdrawals. If you don't know what Celsius Network is, it's essentially a lending firm for Bitcoin and crypto where you can deposit your crypto inside of the lending firm. The lending firm then uses that uses the cryptocurrencies that you put into them to do other things that they have to do with it, and they give you a high interest rate yield as a result of you giving them your cryptocurrencies. Now, this network in particular is different from other networks like BlockFi and FTX and Coinbase that were promising 5-6% return on your money, which is pretty good. 5-6% return on your money. It's not easy to get. They were promising 20%. Which is absolutely insane, right? Because 20% on your money, you don't get that for free. That just doesn't happen. So, oh, it's a New Jersey company. I don't even know. I'm in New Jersey. New Jersey-based Celsius, which has around 11.8 billion assets, offers interest-bearing products to customers who deposit cryptocurrencies with its platform. It then lends out cryptocurrencies to earn a return. After Celsius' announcement that they tweeted last night on Sunday, they were pausing all withdrawals due to extreme market volatility and conditions. Bitcoin touched an 18-month low of 22,725 before rebounding slightly. Number 2 token, Ether, dropped as much as 18% as well. It's still an uncomfortable moment as there's some contagion risk around crypto more broadly, says Joseph Edwards, head of financial strategy at fund management at Soul Rise Finance. Crypto markets have dived into the past few weeks as rising interest rates and surging inflation prompted investors to ditch riskier assets. Now, why did this necessarily happen to the crypto markets? When a lending network is telling you that they are pausing the withdrawal of your cryptocurrencies within that network, that means that something is going on in the market. Well, if something is going on in the market, then your cryptocurrencies, even if they may be safe within the network, the value of them may start to decrease because you're not allowed to take them out, lend them, use them, withdraw them, etc. That means people start selling because at that point people are like, well, wait a second. It's almost like what happened with the Robinhood AMC GME fiasco. It's like if Robinhood's like, hey, you can't buy this anymore, you can only sell. Well, everyone's gonna sell because well, why can't we buy? Because buying is what actually gets the price to go up, right? You need buy side pressure and sell side pressure in order to have a market. If you only have one side doing something, then the stock price is either going to go up or go down. Same thing with crypto. So if you say, hey, you're not allowed to take your cryptocurrency out or do anything different with it, well, then a lot of people are going to get worried and they're like, screw this, I want to sell this, and the entire market's going to react in a negative way. As a result of that, Bitcoin fell tremendously. Ethereum also fell tremendously, and this is what led to this is probably what led to the S&P also being, the S&P futures were down to about 385 last night, and that is what influenced a lot of cryptocurrencies to go down as well. primarily because the futures were bad, because inflation was bad, and interest rates finally, or it's becoming obvious that they're going to have to be probably more than 50 basis points. That is what led the market to realize maybe this isn't the right time to start like being happy and giddy about what's going on. Now, a couple thoughts I had. Well, last thing I say before we begin to my thoughts is Coinbase. Coinbase is down 12% on the day. Now, Coinbase, remember, they make money off the transaction fee from buying a cryptocurrency. So if you buy Bitcoin at like $40,000, they take, I'm going to guess this number, 2%. If Bitcoin drops to $20,000, that 2%, that the same 2% is lower now because the value of 40 to 20 is, you're down another 20,000. So if the asset price decreases, the value of their fees, which is their monetization model, also decreases, which means they just don't make as much money. Coinbase already had a horrible quarter last quarter where transaction volume was down, trailing 12 months revenue was down. So everything was down primarily because people weren't doing as much trading and as much activity on the platform. And now if the assets go down, that only is worse. So if Bitcoin, it's $100 away from 22,000. If Bitcoin gets down to 20,000, people are going to be making trades on Bitcoin. Let's say there even is more buy side pressure. Coinbase is not going to really benefit off that from a monetization perspective because their fees will become fundamentally lower because the percentage of what they take off the asset is also going to get lower. A couple thoughts I have on this. People have been asking me if I've been buying crypto in my Market Open live streams. We had about 300 people show up today, so shout out to everyone who joined 9:20 a.m. Eastern every morning. Today was an interesting one because my stream was lagging as well in the morning. I had to start a new one, and I was like, what's going on? like crypto sucks, the market sucks, the YouTube sucks, my stream sucks, what's going on? So people were saying, why aren't you buying crypto over the past couple of weeks? And I've been saying it's very obvious. It's not a crypto bull or a bear thesis. It's literally like it's way too volatile. It just doesn't make sense to purchase this thing at this moment. Like this asset is very, very volatile. It's scary to buy this asset. And if it's scary to buy this asset, then that means that there is something fundamentally different that's going on. What's going on right now is that the volatility of this asset is so profound. And it might go to the upside or to the downside, but it doesn't take a rocket scientist to realize, well, if inflation is going up 8.6% month over month, which means it's accelerating versus deaccelerating like it was, even if it was a tiny amount last month. Interest rates are going to have to go higher. Tech stocks and their valuations are going to be compressed. Bitcoin has historically not performed as an inflationary hedge or Ether or any of the cryptocurrencies. They're performing more so as growth stocks and NASDAQ type of stocks. Then it's probably more of a risk for it to go down than up. If we look at coin market cap right here, the entire market cap of all cryptocurrencies is below $1 trillion. Bitcoin itself used to be a $1.2 trillion market cap, and the rest of the cryptocurrencies added like another, $800 million of market cap. Now everything is down below $1 trillion. So the entire market capitalization of cryptocurrencies themselves are down below. So it didn't make sense to me to even think of buying cryptocurrencies, especially because I'm already down a lot of money on Palantir, which is one of my main growth stocks. So I was like, why would I buy another asset that is highly speculative and that has the chance to go down? Now, the last thing I'll say here is I think the other number one reason this crash is happening, and this is sort of the psychological perspective, is if you're buying an asset that you don't really understand the utility of, and Ethereum, I think I'll give it credit, has a little bit more utility than Bitcoin to my naive understanding of crypto, because Ethereum to me is you can actually build applications like decentralized finance and decentralized social apps on top of it. So like it operates as this base layer that you can build on top of. So there is some utility there. But if you think of Bitcoin and you don't see the utility, and granted, I do think there is utility. I think there is from banking perspective and developing parts of the world, and from just a general decentralized finance perspective, from a digital gold on the internet payments perspective. That is the bull case for all the ways in which Bitcoin and cryptocurrencies writ large can be utilized. And I think there's an argument. But the majority of people that are buying it probably don't understand that. And this goes to my point, which is that psychologically, if you're buying it because you think it's going to go up, well, if it starts to go down, there is no fundamental reason for you to hold the asset. If Palantir goes down $5, $6, $3, $4, I will buy more because I understand what I'm buying. Whether I'm right or wrong on the trajectory of the company will be shown in the future, but I understand at least what I'm buying. I understand why I'm getting into this asset class. For a lot of cryptocurrencies, people are buying it as a speculative play that the price will go up in the future, which means you're buying a bag in order to give the bag to someone else. And you could say, well, that's the same with stocks, right? You're buying a stock at $5 to sell it at $6, but you're buying future cash flows of a company. Or you're buying like an actual thing that produces something. There's value in what it does. So like the idea that it's worth $5 or $6, there's like logic there as it appreciates in share price. And sometimes stocks get overinflated, obviously like GME, AMC, whatever. But in general, most companies do something and they're valued based upon what they do. And if they're highly effective, they're valued at a much better rate. Bitcoin and Ethereum and a lot of these cryptocurrencies have been valued primarily from speculation. And if that's the case, And again, they can have real use cases, but if they're valued, which means the market and the writ large retail investors are investing as if they're just these speculative assets and they don't care about the use cases, well, then there's going to be no reason to hold. Because if you cared about the use case, you like Tesla folks, when going through the history of Tesla, the reason they're holding is because they understand the mission and the electric vehicles and all the stuff that's in Tesla. So they're like, I'm going to hold it because you don't get it, which is why you're selling it. In crypto, that's a little bit different. The psychology is, well, none of us get any of this, or at least most of us that are investing in it. So let's just sell it off and like let's take the losses and let's probably get in at a small cheaper price and then ride it back to the top, which is a risky game to play. It's a game that if you want to play, sure, that's fine. It's not a game that I'm personally comfortable playing at this moment in my life. I don't have as many assets and as much disposable income as I would love to play with that game. But it's a bit of a more scary game, and I think it's important to recognize this if you're investing in crypto, that the far majority of people do not be confused about this. The far majority of people do not know what the heck proof of stake or proof of work is. They don't know what tokenization is. They don't know what Web3 technologies are. They don't really know what decentralization is. They don't they don't know like how these things actually utilize. They don't even know how the yielding on the lending works and how like the when you put it into exchange, how it gives you a 20% interest rate. Like, people don't know how that stuff works. And if they don't know how that stuff works, then they're just buying it to buy it, which means if they're buying it for moral or philosophical reasons or whatever, that's a fine investment thesis. That is your investment thesis. I'm not going to question anyone's thesis. But the problem is that when it goes down, a lot of that psychology takes in, and the moral and philosophical reasons don't hold up at the end of the day. So those are my thoughts. Let me know what you guys think about crypto. Let me know if you own any crypto, if you're buying the dip, how you feel about it as a currency, how you feel about it as an asset. And yeah, looking forward to reading the comments. I will see you in the next one, and let's see if we can get through this. Bye-bye.